So friends, today we are going to start chapter number 3 of our central banking CIB optional series. Chapter number 1 and 2 I have already covered in previous lecture, and MCQs of these two chapters also already covered, which are MCQs which are given on the last page of the each chapter. That also has been covered. That will be present in MCQ. So one playlist I have created. In that playlist it will be available. So today we are going to start about chapter number 3. So what is there in chapter number 3? First we'll go through our index. So it involves autonomy and independence of the central banks, credibility of a central bank, accountability of a central bank, transparency in central bank operations, conflict with the fiscal policies, separate debt management agency. So one by one we will cover these points. So first point is that autonomy and independence of a central bank. So what kind of independence actually the central bank should have in order to perform their monetary stability or monetary policy function in a smoother way. So first independence, what they are called personal independence. Personal independence means absence of government interference in appointment matters. So there should not be any interference while electing or not electing, while selecting officials at the RBI board. There should not be any political interference. For that purpose, personal independence is required. That is one of the criteria of independence of a central bank. So now at present, central bank governor is appointed by the government only, but rest of the recruitment procedure in RBI is done by the Reserve Bank Service Board. So we will say it is more sort of personal independence already RBI is having. So second point is financial independence. Financial independence means freedom to decide the extent to which government expenditure is either directly or indirectly financed via central bank credit. Automatic monetization of the deficit, subordinate monetary policy to the fiscal policy. So financial independence, nothing but the sole right to decide to how much extent RBI should finance to the government rather than automatic monetization of the fiscal deficit. Because in the period from 1950s up to still 1997, this period was automatic monetization of the fiscal deficit, and that was exactly creating a problem in the functioning of the central bank, because it was hampering the monetary policy function. So that's why financial independence that should be given to RBI for smooth implementation of the monetary policy. Third point is policy independence. Policy independence, nothing but the formulation and execution of the monetary policy, that is solely with RBI only. Then goal independence. Central bank sets its own objectives such as full employment, low inflation, price stability. This objective need to be decided by the central bank itself. That is goal independence. Then instrument independence is nothing but freedom to choose monetary tools for the performance of that monetary policy function. There are so many tools like CRR is not that much given importance. Repo rate, it's a primary tool. Repo rate, reverse repo rate, these are called liquidity adjustment facility. These tools are used specially for as a monetary policy tools for controlling money supply in the economy. So instrument independence also should be given to RBI only, and that is with RBI only. So we have discussed autonomy and independence of the central bank. The next point is why this independence is required. Independence definitely required. Why? Because India is independent. That's why. So that is simply a joke. But yes, autonomy and independence is definitely required. If independence is not given or autonomy is not given to RBI for its functioning. So then RBI will not be in position to control the financial variables like inflation, economic growth rate, financial stability. These variables RBI would not be in position to manage it. So that's why independence is required. Second point I want to explain here is a myopic view of political system and conflict with the fiscal policy. So myopic view of political system means it is a short, because our government short-sightedness, it is talking about short-sightedness, short vision of the government. What government agenda is that? Socio-economic development of the country. For that purpose they always need money. So definitely RBI will our government will always goes to RBI for that monetary support. But government will never think that what could be the implication of creating extra money in the economy. That government will not think, but RBI will think. So RBI has to balance between the funding the government and on the other hand balancing the market. So because if independence is not given to RBI regarding functioning of this monetary policy, definitely RBI will not be in position to control money supply in the economy. It will lead to some bad consequences for the economy. So because of myopic view of political system, the RBI should be independent from the political system, should be autonomous in its functioning. But independence does not mean absence of communication, but it is nothing but a coordination with the government. Yes, autonomy, independence does not mean that you should work in isolation, but you should work in cooperation. You should communicate what is your goal, what are the means I have been taken, that is required. So independence more also it is required to maintain credibility also. Then one more point, Bundesbank. This bank is in from Germany. So Bundesbank insulated from political pressure. Nothing but Bundesbank was enjoying that autonomy, what we are discussing in this slide. Then next point is credibility of a central bank. What is meant by credibility? Credibility is nothing but people will consider you as a credible, authentic, that much. You think that if people start losing confidence in RBI, our central bank, if people start losing that confidence, means people will think that RBI is not in position to control our inflation rate. So there may be, it may create the financial instability in future. So people will start doing their own assumption about the economy. Now what will be likely effect, and they will take decision based on their assumption. So definitely we need one central agency who will publish data, who will create a transparency about what is going on in the market, what is going on in the economy, and what are the steps taken by the RBI to control that variables. So credibility of central bank in achieving price stability, financial stability is required. If RBI is enjoying that credibility, that's why people have trust in RBI. And that's why RBI will also get accountable to people. If credibility is not ensured, then what will happen? Economic agents tend to incorporate their inflationary expectation in their financial plans. Thus, people will not trust bank. They will lose faith that central bank will be able to control economic variables. This assumption led to failure of central bank policy. That's why credibility that central bank must ensure, must possess, and must try to maintain that credibility. Next point is accountability of a central bank. It means central bank, that is RBI, is answerable to our legislature, answerable to people. Here it means answerable for its monetary policy action, accountable to legislature. RBI especially through its monetary policy committee. Then earlier also I have discussed about monetary policy committee. There are 3 members from the RBI, 3 members nominated by the government. So the monetary policy committee main function is to control the inflation in the economy and to decide on the repo rate for each quarter. And then they will place this monetary policy report in front of the legislature. So through this they are answerable to legislature, and they have to explain why that kind of decision has been taken by the RBI. The decision they have to explain to legislature. So accountability has to be there, and it is there. For example, in US federal, chairman also has to give testimony before the Congress, their legislature. In UK also having that monetary policy committee structure. They are also answerable to their chancellor. In our case, monetary policy committee, we are also having monetary policy committee. The next point is transparency in operation of a central bank. It could be defined as the absence of asymmetric information between monetary policy makers and other economic agents, with view to reducing uncertainty and to take informed decision. So transparency is nothing but there should be absence of asymmetric information. Asymmetric information means one person is having information but other person is not having that information. Because of that, asymmetricity will created, and this will lead to crisis. This will create to banking crisis. So Great Depression, Mexican crisis, Asian economic crisis, they were all the example of information asymmetry. One of the reason why this crisis happened was the information asymmetry. So I have explained here that information asymmetry means, for example, in what happened in Asian economic crisis, short-term debt taken by the private players in the Asian countries. So what foreign investor or foreign banks was thinking that their economic variables are good, but domestically how these economies were there, they were knowing more than the outsider, because there were complete financial deregulation, that checks and balance has not been kept. The regulation and compliance was loose, and following of the central bank guidelines, there was no checks and balances on it, and because of this crisis happened in Asian economy. So I already made a video on Asian economic crisis 1997. You can go through it. So that's why transparency in operation of the central bank is required. Nothing but whatever decision taken by the RBI, they should put in front of legislature, and they should explain why the decision has been taken. So indirect way, through RBI bulletins, so RBI monthly report, annual reports, so what are the decision, what RBI is thinking about economy, they will place in public place. And they will put on their website. In this way, it will create a transparency, and people will be aware of the decision of the central bank. So you can think of a period from 1990 to 1996. During this period, Asian economy was booming, and in 1997, despite having a good economic fundamentals, this Asian economic crisis happened. So after a crisis happened, so after that, basic norms also established. So G7, that committee, G7 countries summit has taken place in 1995. That is called Halifax Summit, and that summit specially discuss about the transparency, accountability matters required in central banking operation. This 1995 Halifax Summit specially focus on it. You just remember this point, Halifax Summit. Then in 2000, IMF has formulated a code of good practices on transparency in monetary and financial policies, known as a ELRIC framework. What is the full form from ELRIC framework? That is given here, external audit legal structure and like that. So here that expansion is not important that much, but what is important here is the ELRIC framework given by which organization. what it is called? It is called code of good practices on transparency in monetary and financial policies, and it is given by the IMF. So again, one task force was set up after 1997 Asian economic crisis happened. One task force headed by Mr. Andrew Sheng. His name is important. This Andrew Sheng name is important. Just remember it, friend. 12 key international standards and codes adopted by this task force. They have given 12 international standards, or we say some codes that need to be complied and that need to be followed by the central bank all over the world. So some important standards and codes I have given here. So question can be asked that which organization has given which code. They will give you code in question and they will ask organization, or they will give organization, they will ask codes in option. Like that also possibility is there. So you need to remember that code on transparency in monetary and financial policies, or transparency in fiscal policies, or data dissemination standards. These all codes are given by the IMF. Then code on insolvency given by the World Bank. Then principle of corporate governance given by the OECD. This is OECD, full form is Organization for Economic Cooperation and Development. Then task force on money laundering. That task force was Financial Action Task Force. Then core principle of effective banking supervision. This is nothing but Basel norms only. This is Basel Committee on Banking Supervision. So these codes are important, especially the code which is given by the IMF is important. This question chances is more. Code on transparency in monetary and financial policy, code on transparent fiscal policy, which is given by which organization. The next point is the complete with the fiscal policies. Definitely, sorry friends, definitely for implementing this monetary policy, there will be conflict with the fiscal policy always. Why? Because one of the function of the RBI is the banker to central government, or we'll say union government, banker to government. That will include state government also and central government also. So main problem will be automatic monetization of the fiscal deficit. Government will incur fiscal deficit. To fulfill that, definitely ask for the help towards the RBI. RBI will print money. This extra money created in the economy will create inflationary pressure in the economy. So definitely, because of what happened, on one side you are creating money supply, on other side it will create inflation in the economy. So RBI, one of the function is monetary policy function also, that is to control money supply in the economy. Ultimate objective is to control inflation in the economy. So on one side this objective is there, on another side banker to government, providing money to government, that objective also there. So always the monetary policy will always come in conflict with the fiscal policies. So this point is all about that one only. So what was the case in India? So how the direct monetization was happening in India through ad hoc treasury bill. That is has been explained in our chapter number 3 in IRBA book, Macmillan book. So what was the case here? I will read here. Direct monetization through ad hoc treasury bill existed since the mid-50s and lasted till the end of March 1997. So I will tell you friends, ad hoc treasury bill, that concept was going on in our India from 1950s till the I think April 1997. After that it was abolished. So what was that ad hoc treasury bill? Automatic monetization of the government debt, or we can say fiscal deficit, was done through this ad hoc treasury bill. This bill will be placed with the RBI, and RBI will give money in place of this treasury bills. So what was happening? Government was, but origin of ad hoc treasury bill is regarding that repatriation of the that sterling debt. During that period, actually it has its origin because there was mismatch between the government receipt and government debt repatriation period. So that gap was there. So they at that time, because of that gap, government was not having sufficient receipt to repay that loan. So because of that, this temporary arrangement was made, ad hoc treasury bill, and in place of ad hoc treasury bills, that RBI will use to give money to government. But later on, what happened? This has become a routine practice and become regular in nature. So whenever the cash balance in the government account with the RBI will go below stipulated level, automatic monetization of this ad hoc treasury bill was happening. So because of that, what happened? The outstanding of this ad hoc treasury bill increased like anything. I have explained amount also I have given here. Last point you can see in the outstanding amount of ad hoc treasury bill converted to special security was rupees 1,21,818 crore at the end of the March 1997. This is RBI figure only. RBI has given in its annual report, 2005 annual report only. So this much outstanding was there. So this was nothing but a burden on RBI. So later on, to stop these practices, a supplemental agreement between government and RBI was done during, I think, in initial period of 1990s, around in 1994, to restrict the monetization under this ad hoc treasury bill to say 9,000 crore. Earlier 9,000 crore, later on also they have reduced this amount. So that was also not working. So next second supplementary agreement was made in 1997 just directly to phase out this ad hoc treasury bill, and then new system of ways and means advances commenced from 1st April 1997. This ad hoc treasury bill concept was taken out, and new concept of ways and means advances that start from 1st April 1997. So in next slide, WMA system, this ways and means advances system in 1997. What was this system? Earlier system of direct automatic monetization was stopped. Under this WMA system, for example, government will announce how much fund they will require under this WMA system, and for that particular period they will declare. So at present, limit under this WMA system is 50,000 crore. Means beyond that, government will not borrow during that period. If government want to cross this limit, they can. That provision has been made for that. Overdraft provision has been made, but at a higher interest rate they have to borrow. So at present, for example, for 90 days, if they are borrowing at a repo rate, bank RBI will charge them. If they are crossing this period, penalty interest will be there for borrowing. So WMA system nothing but a temporary support given by the RBI to government just to fulfill the mismatch between receipt and expenditure of the government of India. So how government borrowing program was implemented? So in this slide, especially two concepts are important. One in the private placement of the government security, and second concept is the devolvement. So briefly I will explain, friends, here what was happening. See, if government want money for financing their fiscal deficit, definitely they will place government security or treasury bill with the RBI. What RBI will do? RBI will print money against the against this government security or treasury bill. So now what RBI will do this with this money? Already RBI has created excess money supply in the economy. Now to control money supply or to reduce the inflationary pressure in the economy, what RBI will do? RBI will first gauge the liquidity scenario in the economy and will try to offload this government security or treasury bill in the economy. Then who will be the market player to borrow this security? Nothing but the corporate sector, commercial bank, private sector bank, these are only the market player. So through open market operation, RBI will provide this security to this institution, and this institution will absorb this security and provide fund to RBI. In this way, the liquidity from the market will move from market to the RBI. But what will happen exactly? Sometimes that assessment of liquidity scenario in economy will go wrong, and that much of security will not get absorbed in the market by the our commercial bank or private sector. So because the interest rate on this treasury bill or government security will be less, so it will not attract so other player from the market for investment. So sorry friends, so sometimes RBI themselves has to absorb this excess security from the market, and so this process called as a devolvement. This process is called a devolvement. So RBI themselves is absorbing this security if the security are not getting absorbed in the market. So this concept is all about the private placement and devolvement. So that's why our this function of the RBI as a banker to government was creating conflict with the fiscal policies. So managing public debt, we will say public debt management, was given to the RBI. Still it is with the RBI only. So and it was creating a conflict with the monetary policy. So suggestion from many experts came that we should separate the public debt function from RBI to some separate specialized agency. We have to hand over this function. So that's why this thought also came during when Arun Jaitley, Honorable Arun Jaitley, late Arun Jaitley, he was finance minister at that time. The thought has been given to create a specialized public debt agency who will manage the debt of the government. That is only. So if separate public debt agency will be there, means what will happen? Everything managed by that agency. RBI will not involve in that, but cooperation with that agency will be done. So what is written in slide? It means government would fully fund its deficit by borrowing from the public at the market rate and completely free the central bank from the debt management. It means that agency, separate agency, they will themselves borrow on behalf of the government from the market, and RBI will be free from this concept. Then separate debt management agency will decide on the quantum, timing of issue, etc. in cooperation with the RBI. Why in cooperation with the RBI? Because RBI well understood the liquidity position in the economy. So in order to gauge the liquidity situation in the economy, definitely the separate debt management agency has to cooperate with the RBI when we need to issue this security, what should be the quantum of security, like the cooperation is required. So this agency also will not function in isolation. They have to work in cooperation only. In this New Zealand and UK, they are having separate debt management units. It is given in that chapter. So friends, this is all about chapter number 3, contemporary issues in central banking. So we have covered chapter number 3. In next video, I will cover the MCQs which are given on the last page of chapter number 3. So friends, don't forget to like, share and subscribe our video channel, and also join our Telegram group. I have given in this slide QR code of my Telegram channel. You can scan and join this group. What we are doing actually, we are sharing, means I am sharing the study material and the video also on that Telegram group, and also discussing the MCQs which are given on the last page of each chapter. Additionally, also I am discussing MCQs regarding these chapters. So that group will be definitely highly beneficial to you people and easy for cracking our central banking optional subject. So thank you friends. With this, we'll finish the module A of Central Bank CIB optional series. Thank you.